Hello everyone. Thank you for joining me today. Before we dive in, I want to make something very clear right from the start. This presentation is for informational purposes only. I'm sharing my thoughts and research on XRP based on publicly available data, but I'm not a financial advisor, and nothing I say should be taken as financial advice. Investing in cryptocurrencies like XRP involves significant risks, including the potential loss of your entire investment. Prices can be extremely volatile, and past performance doesn't guarantee future results. Always do your own research, consult with a qualified professional, and only invest what you can afford to lose. With that said, let's talk about why I believe XRP could be a compelling option for those interested in the crypto space. First, let's start with the basics. What exactly is XRP? XRP is a digital asset created by Ripple Labs, a company focused on improving global payments. Unlike Bitcoin, which was designed primarily as a store of value, XRP was built from the ground up to facilitate fast and efficient cross-border transactions. It's the native cryptocurrency of the XRP ledger, a decentralized blockchain that's been operational since 2012. The XRP ledger uses a unique consensus mechanism called the Ripple Protocol Consensus Algorithm, which allows for quick transaction confirmations without the energy-intensive mining process used by Bitcoin. This makes it more environmentally friendly and scalable for real-world use. One of the standout features of XRP is its speed. Traditional international wire transfers through systems like SWIFT can take days to settle, especially if they involve multiple currencies or banks in different countries. In contrast, XRP transactions typically settle in just 3 to 5 seconds. That's not an exaggeration, it's a core design element. For example, if a bank in the US wants to send money to a partner in Asia, they might need to hold pre-funded accounts in foreign currencies, which ties up capital. XRP acts as a bridge asset, allowing for instant conversion and settlement without that inefficiency. This speed isn't just theoretical. It's been demonstrated in live environments through Ripple's on-demand liquidity service, which uses XRP to source liquidity for payments. Cost is another major advantage. Sending money across borders traditionally incurs high fees, sometimes 5% or more per transaction, plus hidden currency conversion costs. XRP transactions, however, cost fractions of a penny. The average fee on the XRP ledger is around 0.001 XRP, which at current prices is negligible. This low cost makes it attractive for micropayments, remittances, and high-volume transactions where every cent counts. Imagine a world where sending $100 to family overseas costs less than $1 instead of 10 times or more. That's the kind of efficiency XRP aims to bring, and it's already being used by companies in regions like Southeast Asia and Latin America, where remittance flows are massive. Scalability is key here too. The XRP ledger can handle up to 1,500 transactions per second, with the potential to scale even higher through upgrades. Compare that to Bitcoin's 7 transactions per second, or Ethereum's base layer at around 1530 without Layer 2 solutions. This makes XRP suitable for enterprise-level adoption, where reliability under heavy load is crucial. Ripple has been working on this for over a decade, and the ledger has processed billions of transactions without major downtime. It's not just about handling volume, it's about doing so consistently and predictably, which is why financial institutions are paying attention. Now, let's talk about partnerships and real-world adoption, because this is where XRP really shines. Ripple has collaborated with over 300 financial institutions worldwide, including big names like Santander, Standard Chartered, and American Express. These aren't just pilot programs, some are in production. For instance, in 2025, Ripple expanded its on-demand liquidity platform, processing billions in cross-border payments. A recent report highlighted that ODL handled $15 billion in 2024, with growth continuing into 2025. This isn't hype, it's actual utility. Banks use XRP to avoid the capital lockup in Nostro Vostro accounts, freeing up billions that can be deployed elsewhere. Regulatory clarity is a huge factor in why XRP stands out. After a long legal battle with the SEC, Ripple reached a settlement in August 2025 for $50 million, clarifying that XRP is not a security when sold on public exchanges. This distinction between retail and institutional sales provides a framework that's lacking for many other cryptos. It means exchanges can list XRP without fear, and it opens doors for products like spot ETFs. In fact, by late 2025, spot XRP ETFs were approved, attracting institutional investors. ETF clients have already bought millions worth of XRP, pushing total assets under management to over $1 billion. This regulatory win isn't just a checkbox, it's a competitive edge in a space where uncertainty has held back adoption. Speaking of institutional interest, 2025 has been a pivotal year. Ripple launched RLUSD, a stablecoin pegged to the US dollar, which integrates with the XRP ledger for compliant, on-chain settlements. Partnerships with MasterCard and others are enabling things like credit card payments settled via RLUSD. Meanwhile, XRP yield products are emerging, like Earn XRP on Flare networks, offering 3-10% yields depending on vault size. This brings DeFi elements to XRP holders, allowing them to earn while holding, which could attract more long-term investors. Market potential is enormous. The global cross-border payments market is worth around $250 trillion annually. If XRP captures even a small fraction, say 1%, that could drive significant demand. Analysts predict XRP could reach $3 by 2026, driven by ETF inflows and adoption. Some forecasts go higher, up to $5 by 2030, based on increased utility and regulatory tailwinds. As of today, December 23, 2025, XRP is trading around 190, down from peaks earlier in the year, but showing resilience. With a fixed supply of 100 billion tokens, 59 billion in circulation, the rest in escrow, scarcity could play a role as demand grows. But let's be balanced. Every investment has downsides, and XRP is no exception. One criticism is centralization. Ripple holds a large portion of XRP, about 40 billion, and while they release it gradually through escrow, some see this as too much control. In 2025, about 12 billion XRP was unlocked, but most was relocked or used operationally, not dumped on the market. Still, this can create price pressure. Volatility is another issue. XRP surged to 367 in July 2025, but has since consolidated. Competition from other blockchains like Solana or even CBDCs could challenge its dominance in payments. Environmental concerns. XRP is energy efficient, using far less power than proof-of-work coins, but broader market risks apply. Economic downturns, regulatory changes elsewhere, or hacks on exchanges. Remember, crypto is speculative, and XRP's price could drop further if sentiment turns bearish. Some analysts are cautious, predicting sideways trading or even declines in the short term. Despite these risks, I see XRP as a great investment because it bridges traditional finance and crypto in a way few others do. It's not about memes or hype, it's about solving real problems like inefficient global payments. With ETFs bringing in institutional money and Ripple's focus on compliance and partnerships, XRP has a clear path to growth. Institutions aren't chasing quick flips. They want reliable, scalable assets, and XRP fits that bill. Think about it. In a world moving toward tokenized assets and instant settlements, XRP's interoperability shines. It can bridge stablecoins, fiat, and other cryptos without friction. As more banks adopt RippleNet, demand for XRP as a liquidity tool increases. Plus, with features like automated market makers and smart contracts on the horizon, the ecosystem is evolving. To elaborate on the partnerships, take SBI Holdings in Japan. They've been using Ripple for years to streamline remittances. Or PNC Bank in the US, which joined RippleNet for faster international transfers. These aren't small players. They're handling trillions in assets. And with the SEC case behind us, more doors are opening. In Europe, Amina Bank partnered with Ripple for cross-border services. This global footprint reduces reliance on any single market. On the tech side, the XRP ledger's upgrades, like the introduction of sidechains and DeFi integrations, add layers of utility. For example, Flare Network allows XRP holders to earn yields through vaults, blending payments with finance. This could attract retail investors who want passive income without selling their holdings. Price-wise, while short-term predictions vary, some see 2.02 by year-end, others 2.85. Long-term outlooks are optimistic if adoption continues. XRP's low bubble risk right now suggests it's in a healthy consolidation phase, primed for recovery. In comparison to Bitcoin, BTC is digital gold, great for storing value, but slow and expensive for everyday use. XRP complements it by enabling fast, cheap movements. Versus Ethereum, ETH excels in smart contracts, but gas fees can spike. XRP's focus on payments gives it a niche edge. Why not other payment coins? Many lack XRP's track record or partnerships. Stellar, XLM, is similar but hasn't scaled as broadly. Solana is fast but has faced outages, and it's more DeFi-oriented. To wrap up, XRP's strengths in speed, cost, adoption, and clarity make it a standout. But remember my initial disclaimer, crypto is risky. If you're considering XRP, look at your risk tolerance, diversify, and stay informed. Thanks for listening. I'd love to hear your thoughts. Write to Justine Clark.